what's this role of the conceptual framework that they do? So let's move to that part. So the role of the conceptual framework is to establish the concept that underpin financial reporting in the public sector entities that adopt the accrual basis of accounting. The IFSAS board, or so that's the International Public Sector Accounting Standard Board, applies this concept in developing the IFSAS and the RPGs applicable to the preparation of presentation of general purpose financial reports for public sector entities. So the conceptual framework is a concept that underpins the financial reporting in public sector. So it guides the International Public Sector Accounting Standard Board to prepare. It's a guidance for them to prepare what these standards, and this standard guides us in what in the preparation of what the financial report we have been doing. So conceptual framework in a larger concept guides the preparation of standards or setting of standard, and the setting of standard is done by the International Standard Public Sector Accounting Standard Board. Okay, so they do the standards, and this conceptual framework guide them to prepare or to set the standards. So that's the rule. That's the rule of conceptual framework. And in the last part, you see that in relation to authority, the conceptual framework does not establish authoritative requirement for financial reporting by public sector entities that adopt IFSAS, and it does not also override the requirement of IFSAS and the RPGs. Okay, so you look at these two terms. Okay, so don't worry. So the International Accounting Standard Board use the conceptual framework to set the standards. Okay, but when these standards are set, they are what guides us in the preparation of the financial statement. We don't use the conceptual framework in preparing the financial statement. Okay, so in the case where the IFSAS is not available, the standard is not available, that's where you can go and visit conceptual framework, and even that it's just guiding your decision as to how to classify a certain asset, liability, or revenue. But then in preparing the financial statement, the IFSAS is what we use in preparing the financial statement and not the conceptual framework. Okay, so as I earlier mentioned, the International Accounting Standard Board, the Public Sector Accounting Standard Board, uses this concept to develop the IFSAS, that's the International Public Sector Accounting Standards, and the recommended practice guides, that's the RPGs. Okay, the recommended practice guides or guidelines. Yes, so I don't know if anyone has any questions now for me. Please, does it mean we are okay?
Yes.
Okay. So we are going to then look at what the recommended practice guides or the guidelines. Okay, the recommended practice guidelines. Okay, so it is also issued by the International Public Sector Accounting Board to assist public sector entities in applying international public sector accounting standards. So the recommended practice guide is the guidelines, their guidance issued by the IFSAS board. Okay, so IFSAS board and International Public Sector Accounting Board to assist public sector entities in applying the international the IFSAS. Okay, so they are it's a guideline that's issued by the board to assist public sector entities in applying what the accounting standards. Okay, so whenever you are preparing a financial statement, these recommended practice guides are in the IFSAS, and they are going to guide you in your preparation of the financial statement. So if you take maybe IFSAS 1, IFSAS 2, you know what's there and what you are going to use in the financial statement. So these are guidance that are issued by the board to guide you in applying the IFSAS. Please, understood?
Yes, please.
Yes.
Yes, sir.
Okay, so we are going to look at the purpose for the recommended practice guide. So they provide practical guidance on specific accounting and financial reporting issues that may not be fully addressed in the existing IPSAS. So whenever they are trying to bring in a specific accounting, they are trying to resolve a specific accounting reporting issue, okay, they try to go to this recommended practice guide to resolve these issues. Okay, so they have to visit the recommended guides to help them to address any issues in the standard. Okay, so it actually helps the public sector entities to effectively address issues and gaps in the standard, because there is like a guide. So whenever let's say you are in an audit firm, you have these guidelines in doing your audit. The same way, these recommended practice guides help them in resolving issues in the standard. Okay. So that's all for the recommended practice guidelines. That's all for it. Okay. The major issue is the IPSAS, because this one it doesn't have more information. The recommended practice guides, it doesn't have more information, but rather the IPSAS. IPSAS is where you have more issues to talk about. All right. But now let's look at the authority of the conceptual framework. The authority. I earlier mentioned the authority of the conceptual framework. I don't know if anyone remembers that and can mention that to us. Hello. So far, I've been doing the talking. I don't know if anyone can help us with the authority. Thomas.
Yes, sir.
Yeah, can you please help us with I mean, whatever you think about the the authority of the conceptual framework. I mentioned it in the earlier slide. I don't know if anyone heard it.
The authority.
Please say, I wasn't here earlier, so I missed a lot, and it's like where I am now is currently noisy. So
Okay, that's fine, no problem. Bassett, I think Bassett has been.
yes, sir.
Okay, Bassett.
IPSASB.
Bassett, please, can you come again?
Is it the IPSASB?
IPSAS, no. I mean the authority of the conceptual framework.
Okay, I don't get it.
Hello.
Yes.
Yeah.
Augustina, please can you come in?
I heard that the conceptual framework does not establish any authoritative requirements for financial statements of reporting of public sector.
Yes, exactly. So, I that's what Augustina has mentioned. Okay, so the conceptual framework has no authority over the IPSAS. Okay, so the IPSAS is the actual standard. Okay, so this conceptual framework, it does not have any authority over the standard.
Sir, please, we can't hear you.
Hello. I thought I was the only one who cannot hear.
Okay, please, can you hear me now?
Yeah, please.
Yes.
Hello.
Yes, sir.
Yes, sir.
Yes. So that's the authority of the conceptual framework. It does not have any authoritative. Who is this? Afo. Okay. So there is no authority of the conceptual framework over the standards. Okay. So where there is a confusion as to what we use between a standard and a conceptual framework, we go by the standard, the IPSAS. That's what we use for in reporting or for our reporting. Okay. So let's move to the notes and let's see what they are telling us there. So the conceptual framework assists in developing and applying accounting policies, but it does not override the requirement of a specific accounting standard. Okay, so let's say you have the IPSAS. Whenever you have the IPSAS in place, this conceptual framework has no authority over the IPSAS. So if the requirements say that IPSAS needs to be recognized at a replacement cost, the conceptual framework does not have any authority over that. Okay, but the conceptual framework will just give you that, okay, this particular thing, it can be classified as revenue, asset, or liability. That one, the conceptual framework can help you do that. But how you recognize it in the financial statement is being guided by what? The IPSAS. So the conceptual framework assists in developing the standards, but it does not override the requirement of a specific accounting standard. Where a specific IPSAS applies, the requirement of the IPSAS take precedence over the conceptual framework. Okay, so in any case where a specific IPSAS applies, the requirement of the IPSAS take control over the conceptual framework, takes control of the conceptual framework. The conceptual framework does not have any authority. So the authoritative requirement for recognizing, measuring, presenting transactions, and other events in the financial report, the general purpose financial report, are specified in the IPSAS. Okay, so as I earlier mentioned, in any case, when you are preparing your financial report, you are being guided by what? The IPSAS. The IPSAS. The IPSAS. And not the conceptual framework. Okay, so the conceptual framework does not have any authoritative requirements over the IPSAS. All right, please, any questions for us to discuss? Okay, I have a simple example here. Okay, so a government hospital is preparing its annual financial statement in accordance with IPSAS. During the year, the hospital receives a non-exchange grant from the government to purchase medical equipment. The finance team consults the conceptual framework for general purpose financial reporting by public sector entities to understand the nature of the transaction. The framework helps them understand concepts such as assets, liabilities, revenue, recognition, and measurement. However, the conceptual framework does not provide detailed requirements for accounting for the particular government grant. The finance team therefore identified the specific IPSAS dealing with the revenue from non-exchange transaction and applies its recognition and measurement requirement. So, as I earlier mentioned, there is a typical example of whatever we have spoken about. In any case, when you are being tossed between choosing the conceptual framework and the IPSAS, you have to go with the IPSAS. You have to go with the IPSAS in recognizing any transaction in the financial statement. Okay, in recognizing the financial. So there's a typical example of whatever you are speaking about with the authority of the conceptual framework. It has no authority over the IPSAS or the standard. So please pay particular attention to that. Pay particular attention to that. All right, please. Do you have any questions? All right.
No.
All right. If you have no questions, then we can move on to the next thing. Yeah. All right. So we have some part of the example here. Even if the finance team interpretation of the conceptual framework appears to suggest a different accounting treatment, the specific requirements of the applicable IFSAs must be followed. Therefore, the conceptual framework does not have authority to override an IFSAs. Its role is to provide the underlying concept that support the development and application of accounting standard. Okay, so in developing the standard, you have to consult the conceptual framework. But in doing the actual thing or the actual work, in preparing the financial statement, you have to go by the IFSAs. All right, so please, you have to pay attention to this one very well. So we then move to a reporting entity. A reporting entity. Okay. Please, any questions regarding the authority of the conceptual framework? All right, so let's move to a reporting entity. A reporting entity. A reporting entity. Please, who can actually say something about reporting entity? Anyone can unmute and talk about what a reporting entity is. Please, there is no wrong answer here. Okay.
Please, can I come in?
Yeah, Afo, you can talk.
So, okay. In context of public sector, the reporting entities are the various public organizations, that's the public enterprises, that are to present their financial statement at the end of each financial or accounting year. So that's
exactly.
how
All right, sure. So I think Afo has said it all. So when you talk about a reporting entity, it's anything in the public sector, okay, who has the authority to present its financial statement or at the end of what? A period. Okay, at the end of a period. At the end of a period. So let's look at what our note is telling us. So a public sector reporting entity is a government or public sector organization or program that prepares general purpose financial report. Okay, so as soon as you prepare a financial report, you are a reporting entity. You are a reporting entity. I mean, in the public sector, if you are in a public sector domain and you prepare your financial report, the general purpose financial report, you are a reporting entity. Please pay attention to this very, very well. Pay attention to this very, very well. Okay, whatever we mention here, pay attention to it. And after the class, you go and revise on your own. Okay. So we have another thing here, the group reporting entity. Okay, we have that's two or more separate entities combined to present general purpose financial report as if they are one single entity. As if they are one single entity. Okay, that's a group reporting entity. Okay, so if you have heard of consolidation, you can use that as a typical example. Okay, so different report entities, I mean public sector, come together to present one single report. It's a group reporting entity. A group reporting entity. So let's look at what the key characteristics of what a reporting entity. If you say a reporting entity, what are their characteristics? What are their features? Okay, so let's first of all talk about the first of all raises resources from or on behalf of the people itself and uses those resources to carry out activities for their benefit. So that's a main characteristics of what a reporting entity. Please, if you have your notes with you, please write this or put it in your permanent memory. Okay, because these things they have been coming very, very well. So a reporting entity, the key characteristics of a reporting entity, they raises what resources from or on behalf of the people itself. So let's take Ghana. Okay, Ghana. If you look at the government, okay, we can say the government is a public sector reporting entity. Why? Because it raises resources from the citizens or on behalf of us, and they use those resources to carry out activities for our benefit. All right, so in this scenario, you can take the government and a citizen. The government is what a public sector reporting entity. and they are what? Raising resources from us by us paying taxes and all those stuffs. And they use these resources to carry out activities on our behalf. How? They use these taxes we pay to run the country for us in building infrastructures like roads, markets, and all those stuff for us. Okay, so that's a typical example of that. Let's also look at the second one. People who receive services or provide resources rely, and so they rely on what? The general purpose financial report for information to hold the entity accountable. So you see, at the end of the day, we the citizens, we are going to rely on the financial report being prepared by what? These government entities to make decisions. Okay, so the taxes they took from us, the indirect taxes they took from, the direct taxes they took from us, what are they using it for? So we are going to check the general purpose financial report to see what these government entities are using our monies for, our taxes for. Okay, so that's the two main characteristics of a reporting entity. Yeah, so please, who can mention the two characteristics? I need two people to mention the two characteristics of a reporting entity for me. Two people. I can call anyone, right? Because we just mentioned this one. Entry Collins, are you here?
Yes, please, but I didn't get that part where I was doing something, so I couldn't get that part. Sorry.
Oh, Entry, be careful. Entry, be careful.
Yes, please, sir. Yes, please, sir. Thank you.
Benjamin. Benjamin. Hey, Benjamin is also not with us. Nathaniel. Hey. Nathaniel. Okay, Benjamin.
Yeah, hello, sir.
Yes, please. I want you to mention one key characteristics of a reporting entity for me.
Okay, so the report to the people.
Benjamin.
I don't know if that. Yes, sir.
Benjamin, I have the slide on the board. Faustina.
They raises resources to perform activities on behalf of the people.
Yes, so they raise the resources from the people, and they carry out activities on our behalf for our benefit. And I gave a typical example. The example is I took the government and the citizens of Ghana as a typical example. Okay, so the government, they take some resources from us. That's the taxes they take from us, and they use these taxes to carry out activities for our benefit, like building roads and stuffs. Okay, so Benjamin, please. Benjamin.
Yes, sir.
So that's what you are talking about as what a characteristic of a reporting entity. What you mentioned is the meaning of a reporting entity, even though you need some two or more polishing. But then a key characteristic of a reporting entity is they raise resources from the people and use these resources to carry out activities for their benefit. Example, the government and the citizen. All right. So please, who can give us the next or the second characteristics of a reporting entity? Charity Nati. Charity, are you with us?
Yes, please.
Yes, please. So the second characteristics of a reporting entity.
They provide resources on the entities for information to hold the entity accountable.
Okay, that's fine. Entry Collins, you can help her.
Oh, okay. So I think to understand this, the resources that they've taken from the people or the service that they are providing to the people also demand information from whatever they have used the resources from. So that is, they rely on the entities' general purpose financial reporting information to hold them accountable for whatever decision they have made out of the resources they've taken from the people. Thank you.
Exactly. So the first characteristic is that the government, so I'm just using the government as an example. Okay, please let's all pay attention. Okay, let's try and pay attention. So the government, they raises resources from us. Okay, by taking taxes from us, right? And in return, they what? They carry out activities for our benefit, the government and the citizen. And at the end of the day, the citizens, we are also going to rely on the entities. Those who are taking the taxes from us, they're going to rely on their general purpose financial reports to hold them accountable and also make decisions. Okay, so those are the key characteristics of what? A reporting entity. Please, this particular one, you have to pay attention to it. It has been coming a lot. Please, do you have any questions? If not, you can continue, right? All right, so we move on to the general and special purpose financial report. General and special purpose financial report.
Hello, sir.
Yes, please.
I have a question.
Okay.
Can the second point? Can you say that the reporting entities they produce goods and services for the interest of the people, or to suit the interest of the people?
So you mean the second one?
Yes.
Okay, so with the second one, the second one is actually talking about getting some information to make decisions and also to hold people accountable. Okay, so first of all, let's take you and I, for instance. Okay, so let's say you are the government and I am the citizen. Okay, so the first point is saying that you, the government, you are taking some resources from me as a citizen. All right, and you are using these resources for me, for my benefit. How are you by carrying out what activities? These activities may include what? Building of roads, markets, building stadiums, doing some economic work for us or for me. And at the end of the day, me that I've given you my taxes. The second point is saying that me that I've given you my resources to do something for me, I'm going to hold you accountable. How? By what? Relying on your financial statement or the general purpose financial report that you have prepared to make a decision and to hold you accountable. That's why sometimes you see people go to the MCs, and those people go to the public account committee to sit there and account for whatever monies they have taken from what? The public. Because at the end of the day, the government has taken some taxes from the people, and as an MCU or whatever, they have entrusted you with this money, right, to build or to do activities on the behalf of the people who gave you the money. So at the end of the day, you have to be able to account for them. You have to account for these things, like how you spend the money. You have to account for them. Please, I don't know if you understand this. So the second point is actually talking about people holding those who took the resources accountable. Okay.
All right.
Yes. Victoria. Okay, Victoria, you can come.
So if it's not in the case of a country and a citizen, and it's an organization and they are providing the same services to the people within the organization, can it be referred to as
Please, I can't hear you well. Can you match your voice, please? Hello, Victoria.
Yes, can you hear me?
Okay, you can talk.
Yes, so I'm saying that if the scenario is not referring to a citizen in a country,
okay,
and it's an organization that is providing the same service or getting the same resources from its members and providing the same service for the people, and the people in turn hold the leaders within the organization accountable, can it be referred to as a general purpose financial statement?
Yeah, so the general purpose financial statement is actually prepared by what? The public sector entities. All right. So if these organizations you are talking about are in the public space or the public sector space, all right, and they have taken resources from anyone to provide them with services or to carry out activities on for their benefit, at the end of the day, if anyone is holding them responsible, yes, it's part of this. Okay, so the two main characteristics are the public sector reporting entity is that they raise resources from the people itself and uses those resources to carry out what activities for their benefit. That's one. The second one is people who receive services or provide the resources rely on the entity's general purpose financial report for information to hold the entities responsible or accountable and make decisions. So your scenario is right, but you have to also be careful and ensure that these entities you are talking about are in the public space. I mean the public sector. Okay. We're talking about public sector here.
Hello, sir.
Yes, please.
There's a piece. I want to come in with some example concerning the question Victoria raised.
All right, sure. Okay.
So for the entity was talking about, in case it's not the public sector and it's a private organization, we assume that they operate within a community, and as one of their responsibility is to perform what is called corporate social responsibility. So based on your general purpose financial statement you prepared, the community in which you are operating, based on that, if you make a profit or like even a profit, we assume that you need, once you are operating within our environment, you need to give back to the community. That's why organizations now are mostly tend to perform what is called a corporate social responsibility. That one, you are giving back to the people, not necessarily to the general public, but within the community in which you are operating. So that's how a bit understanding.
Okay, yeah, your scenario is very, very clear. Okay, and I think you are making sense. Yes. But then we have to also put in mind that with this topic, our focus is more on what? Public sector.
Yes,
okay,
please.
The public sector.
Thank
so
you.
Please, yeah. Okay. So Victoria, please, are you okay? Can you move on to the general and special purpose financial reports?
Yes, sir. Thank you.
All right. So let's now move to general and special purpose financial reports. With this, it goes by the name, you understand, general and special purpose financial reports. Please, I want someone to just give me a little explanation for the general and special purpose financial. This one, general, special. It comes from the name. All right, Felix.
My understanding about the general purpose financial report is the general report that you actually prepare at the end of a financial period.
Okay.
And the special purpose financial reports are normally not at the end of a financial period, but then as in when it demands, then you prepare it to suit whichever situation that you are supposed to address.
Okay. That's not bad. Who can also help with these two explanations? Who can also help, please? Please, there are no wrong answers here, okay? Whatever you think, you can come on board and share so that we are all learning. All right.
Okay,
All right,
so I
Elo.
think the special.
Okay,
Okay, Elo.
so I believe the general purpose financial report is issued to the general public, while the special purpose financial report is issued to specific users of the financial statements. Yeah.
All right, very good. Okay, thank you very much. Victoria, you wanted to say something. You can also come on board.
Yes, so I wanted to say that the general purpose financial statement is for the general public, which is usually not requested, but then the special one is requested by specific entities,
Exactly.
organizations.
All right, thank you very much. So you understand? You are all right. You're all right. You're all right. You see, the general, as Victoria and Eloman, my other friend mentioned, the general is for the general public. Special is for specific people. They actually request it. They are prepared based on what request or upon request. It's not just for anything. Okay. So let's look at what our so general purpose financial statements are those intended to meet the needs of users who are not in position to demand reports tailored to meet their particular information needs. Okay, so the general purpose financial statement, as you mentioned, is prepared for the general public, for anyone. Okay, and those people they are not in a position to request the financial statement of an organization. They cannot just come and say, hey, I need your financial statement to no, they cannot come there and say that. Okay, so but this one, when you prepare your financial statement, it's just for them. They can just go and look at it. That's fine. So that's the general purpose financial statement. Okay, so let's look at the users. So who are those people who pay attention to this general purpose financial statement? The users. Who are these users? We have the taxpayers, creditors,
The
suppliers, the media, employees. So all these people are, so whenever a public entity prepares its financial, you as a taxpayer, you'll be interested. You just go in, but you cannot just go to, let's say, which company, the Ministry of Finance, and go and say, please, I request that you prepare financial statement for me right now. I want to check something. You cannot, as a taxpayer, you cannot just go and do that. As a creditor, you cannot just go there and say, please, prepare financial statement for me and let me check if you can pay my credit. No. Supplier, you cannot do that. Okay. The media cannot just go. Like Peace FM will go and tell the Ministry of Finance that prepare your finance. No, you cannot do that. Even the employees, you cannot do that. But for a special purpose financial statement, as you all mentioned, it's for special people. Special purpose financial are prepared to meet the specific information needs of users who have the authority to request these reports. Please, can you come on board and give examples of the people who can actually come into your organization and request for a financial report?
Please, the attorney general.
Okay, hello.
Auditors. The auditors.
Okay, auditors.
Auditors.
Okay, who else?
Revenue authority, like the GRE and stuff.
Please, let's try and raise our hands, okay, so that will not be, because anyone is yes talking. Okay, so Kenneth.
IMS.
Okay. What else, please? Okay, I've seen someone writing IMF. Okay. IMF. Okay, Francisca.
Auditors.
Yeah, auditors too can request. Okay, Raymond.
Non-profit organizations.
Yoko.
Non-profit organizations.
Yoko.
No, Raymond, please, can you, not how, please.
I said Yoko.
Yoko. Okay, that's fine. All right. Okay, Joshua.
Investors.
Okay. Okay, the Parliament of Ghana. Okay. So don't you think the court to the law court? I mean, if let's say your organization is in a in a dispute with someone in the courts, they can also request that to prepare your financials for them to have a fair view, or they can request for it. Yeah. So these are what the people who can actually request for your financials for especially a particular purpose. A particular purpose. Okay. Any questions? Any questions? All right. If there are no questions, we can then move on to the objectives of the general purpose financial statement. Okay. The objectives of general purpose financial statement. You see that we said the general purpose financial statement is for the general public. And those people who are really interested in the general purpose financial statement are the taxpayers, creditors, suppliers, the media, employees. So what do you think will be some objectives or the importance of the general purpose financial statement? What do you think will be some of the importance? What do you think will be some of the importance of the general purpose financial statement? Okay, Afu.
It's for accountability.
Afu.
Yeah, please, can you hear me?
Yeah, I heard you. I was asking if you can say something more about the accountability. How does it ensure how does it ensure accountability? How?
Okay. So the general purpose, for instance, I don't know, can I use a scenario?
Yeah, you can. You can.
Okay, so not in as in political content, but for recent news popping up about the Good Board and Bank of Ghana losses, for instance, they need the people of Ghana demand for the accountability of the Good Board. So the special purpose, for instance, on the part of one political party are demanding for their general purpose financial statement at this moment, so they will know the loss that was incurred, why, and so it's basically give an accountability of
Sure.
those.
Yes, you are right. Afu, thank you very much. Elon, you can also come on board. You mentioned a point. You say something small about it for the class. Okay, please.
Okay, so the general purpose financial statement also helps to provide information to the users of the financial statements, like investors, creditors, taxpayers, so that they can be able to make informed decisions regarding the financial statements. For example, the investors, let's say for example, investors, if it will provide information so that they can be able to know whether to invest.
Yeah. You are right. Deborah, you can also talk about one. Deborah, sorry. Okay, Deborah is gone. Zakaria. Oh, Zakaria.
Sir, please, the question again.
Can you reply?
Deborah, I wanted you to mention one importance of a general purpose financial statement.
Transparency.
Okay, Felix, I need one more so you can move on.
So also to show the performance of the organization to the general public. That is, it helps to know the performance organization in order to decide, or let me say, in order to make decisions for the investors to make decisions, or users of the accounting information or the statement, the reporting information to make decisions. In the sense that when they present their when they prepare the financial statement, it helps them to track previously and the current state of the organization, whether to invest or not to invest, whether to go on to invest with them or not to. That is my understanding. So to show performance or to tell the general public the performance of the organization.
Exactly. All right. Thank you very much. You all done well. So let's move on to what our note says. So accountability, as you all mentioned, so it's going to provide information that helps users assess the accountability of the public sector, including how resources have been used or managed. Okay. So decision making. So to offer relevant financial information that aids users to make informed decisions regarding the allocation and use of resources, and resource management to inform users about the financial position and performance of the entity, how efficiently and effectively resources have been managed. Compliance to demonstrate the entity's compliance with relevant laws, regulations, and policies that govern its financial operation. Transparency to ensure transparency by providing clear and understandable financial information to all stakeholders, including the general public, service recipient, and resource providers. Okay, so these are the five objectives of the general purpose financial statement. Okay, so the general purpose financial statement. All right. Please, any questions? Zachariah, is it an old hand or you want to say something?
Please, I saw suppliers.
Please say what?
I saw some of the users to be suppliers. In the context of the general purpose financial statement, who can you consider as suppliers?
I don't understand your question, so please.
I saw the users of the general purpose financial statement.
Okay.
And one of them is the suppliers.
Yes, suppliers, yes.
So I want to understand in the context of that, which people is regarded as the suppliers?
Okay, so you see, for public sector entities, okay, let's say schools. Don't you think schools have suppliers? They have people that supply them goods and services. Okay, so they can go in for a consultant. They can go in for those who have been providing these school feeding programs. They have been providing them with a lot of staffs. That sometimes at the end of the year you have to pay them. Okay, so all those people are suppliers and they are interested in the general purpose financial. Why? Because they are going to look at whether you are going to be able to pay them, or even or the goods you are buying, is it really in conforms with what it conforms with your organization, the situation in your organization. So suppliers also pay attention to our financial statement very, very well. Felix.
Sorry, say it's all done.
Okay, so please, suppliers pay attention to us. Suppliers pay attention to our financial statements also. Okay, so suppliers for public sector entities, they have suppliers. Okay, please, do you understand the objectives? Please read more on this one. Okay. So you have the users of the general purpose financial statements, and they are grouped into two: the primary users and the other users. Okay, you have the primary users and the other users. The primary users and the other users. Okay, so government and the public sector entities raise resources from various sources for the provision of goods and services to citizens and service recipients. Okay, so these entities are accountable for managing and using resources to those who provide them and to those who depend on them for necessary services. Okay, so let's look at the primary users. The primary users. If you say primary user, that means you are a key user of the that means as soon as someone posts or an entity posts their general purpose financial statement, you want to check because you are very, very interested. You are really, really interested. Okay, so let's look at them. The citizens. Every day, every day we have been hearing how our resources have been mismanaged by the public entities, how they are misusing our like resources, how so as soon as there is a financial statement, you are going to like you are in rush to go and check how your resources are being used, right? How your resources are being used. Parliament, I think Felix mentioned or someone mentioned that recently there have been or success. I think success mentioned there have been propagandas and stuff. So we have the minority and the majority. So as soon as a public entity issues its financial statement, the parliament they want to know what's happening in that particular organization or entity. Okay, and also they represent the citizens because wherever you are, you have a representative at the parliament house, right? So everyone like they are also interested in the general purpose financial. They are the primary users. Taxpayer, you and I, we have been paying tax every day. Every day, whatever you buy food, there is tax. You pay, they pay your salary, there is tax. You go and buy ice cream, there is tax. So you are also interested. You are also a user of the general purpose financial report. And we have people who donate, like the IMF. Okay, we have this World Bank. Sometimes we are in crisis, and they will say, "Oh, you will give me something." So those who donate to us, they are also the users. They want to come and check, even though we are donating to them. How are they using these donations we are making to them? How are they using them? Lenders and creditors. Okay, like he has given you something. He has given you some money. He has given you some goods on credit. He wants to know from your report that in the future, are you able to pay them off? Are you bankrupt? And like they make decision on that. Okay. So these are the key users of what? The general purpose financial statement. These are the key, the citizens, the parliament, the taxpayers, the donors, lenders, and also creditors are all primary users. Let's also look at the other users of the general purpose financial. So government statisticians, okay, sometimes for their own purpose, they want to check your financial statement and do the analysis and stuff and do some stuff. That one, so even if and also because there are others, the reason why there are others is because sometimes it's not necessary. It doesn't interest anyone. It's for their own purposes and for social media. Okay, analysts. Sometimes they want to check whatever is happening so that they will analyze what's happening in the economy. Okay, how others are using their resources. Okay, the media for discussions and stuff. The media also financial advisors for their own sake. So these are what other users of the general purpose financial statement. So please pay attention to the primary and the other users of the general purpose financial statement, as it's very key for exams. Okay. Okay, so please, after you just go and check the past questions, you see that these are the questions they have been bringing in the past questions. I mean the exams. Okay, so let's move on. There are more. Just go and look at them. Okay, the other users of financial. So we are going to look at what the characteristics of financial reports in the public sector. The characteristics, the features. I think for the past 30 minutes I've been speaking. So I want everyone to come on board. Ernest, I think I've already projected the characteristics, the 6 qualitative characteristics of the general purpose financial reporting or financial reporting in the public sector. So you can pick one and say something about it. Ernest Kunedu, pick one, any of them, and say something about it, okay? Ernest.
Sir.
Yes, NS, please pick one. You
Okay,
have
so I'm picking faithful representation.
All right, sure.
Okay, so it says that the information should be useful in financial reporting, and it needs to be faithfully represented of the economic and other phenomena. That purports the okay. So
Okay.
the information should be useful for the needs, and it should be faithfully represented. Yes.
Okay. NS, thank you. Felix, you can pick one in.
Picking timeliness.
All right, you can talk.
I'm picking timeliness. I think information provided should be on time for it to be effectively be used. Because if you don't provide it on time, or if you don't provide it as quick as needed, its effectiveness will not be achieved.
Exactly. Okay, Deborah, you can also pick one.
Sir, please, relevant. Please, the information should be material and have the ability to influence decision.
Exactly. All right. Thank you very much. Please, who else? I need 3 more people. Okay, Elon.
Okay, so I'll pick comparability. So the information should be comparable with the previous years or the previous year's financial statement, and then that's of, let's say, an industry or other entities.
Exactly. All right. Please, who else?
I would pick
Okay, Kenneth.
relevance.
All right.
Relevance. So we say for a report to be relevant, it needs to have 2 main features, which is predictive value and also confirmative value.
Okay. And the last one, please, who can help us with that? The last one. Can I mention anyone's name? The last one.
Understandability.
Okay.
Verifiability.
Okay.
Verifiabilities. Another person should be able to get the same result you got using the same procedure.
Okay. Understandability, please, who can talk about that for me so that we can move on?
They should be able to be understood by the users of the information.
Okay. Very much. Thank you very much. Thank you very much. So let's look at them one after the other. So the 2 key that you have to pay attention is the relevance and faithful representation. Most of the time, they ask you questions about them, like to talk about them, especially in FR. Okay. So, but now in public sector accounting, we have more to talk about. Okay, so relevance. Information in the general purpose financial report should be capable of influencing decision making and achieving financial reporting objectives. Okay, so what's the reason for preparing the financial statement? You are preparing the financial report because we want people to understand what's happening in the organization, how our finances are, or how our resources are being used. So this financial reports are relevant if it is able to influence the decision of those users of the financial position or financial reports. Okay, so and achieve the objectives. As I mentioned, the objective is like showing the people how resources are being used in the organization. Okay, and also it may have confirmatory and predictive value. What is confirmatory value? It's actually when information confirms or changes past expectation. Okay, and essential for accountability and decision making. Afro, please, can you mute?
I went to airport.
It was, sir.
Okay.
Yeah,
So, so, so information is, so that's confirmatory. Okay. So when information confirms or changes past expectation and is essential for accountability and decision making. Okay. So that's for confirmatory. Like we have to be able to confirm our past expectations. What you were expecting. Okay, you were expecting that this that was being done. So we are going to confirm with the information provided in the financial report. Okay, and when you confirm, you are able to make decisions and also to like ensure that people are accountable, to hold people accountable. All right. You have faithful representation. Faithful representation. As Kunedu explained, financial information must be faithfully represented or represent economic phenomena. Okay, that's it should be what complete, neutral, and free from material error, capturing the substance rather than just legal form. So your information should be what free from error, like material. If you say material error, like you have prepared financial statement or financial report and you see that difference, like maybe an inventory amount of 1 million Ghana cedis or let's say 20 million Ghana cedis is not recorded in a as part of the inventory value. That's not reliable. You cannot rely on that financial report. Okay, like it's not even complete because you have inventory of $1 million or $2 million and it's not in the financial statement. So it should be free from that error. Okay, any error should be immaterial. Okay, so it should be complete, neutral, and free from material error. Okay, so and the next one is what understandability. Information should be clear and comprehensible to users with a reasonable understanding of business and economic activity. So when you prepare your financial statement or your financial report, anyone who picks the financial report, even an art student or the boss who is from the logistics department, should understand the financial report. It should be understandable. Timeliness. You cannot prepare your financial statement, let's say at the 31st of March, and present it at the 29th of April, or let's say 15th of April. No, you are going to use this March financial report to plan for April. Okay, so that's how we use our resources for March. So in October, in April, I want us to go by this way. So the timeliness will help to make those decisions. If you are bringing it at the 29th of April, how are you going to plan? Okay, so your financial statement should be reported on time. Okay, comparability. Users should be able to compare information over time and with other entities. Okay, so let's say your performance in January should be able to be compared with what February, and also the same information should be able to be compared with other entities' financial reports. Okay, so that's why you have to follow the IFSAS or the particular standard. Verifiability. Different knowledgeable and independent observers should reach a consensus that the information faithfully represents the economic phenomenon. Even if someone comes and pick this, your financial report or your report, they should be able to confirm that this financial report is complete, neutral, and free from what material error. That's what we are talking about here. If someone should pick it, the person should what be able to confirm that. Okay, so that's for the what characteristics. Please, any questions? Okay, so let's look at the constraint on information included in the general purpose financial report. Okay, so we have some limitations. Okay, even though we are preparing the financial report using the IFSAS, but we have some limitations. We have some limitations. We cannot just do anything anyhow. Okay, you have to be guided. Okay, so materiality, and I brought why is materiality a constraint or a limitation? It limits the information needs to be included in a general purpose financial report based on its significance. Information is only included if its omission or misstatement could influence what decision making. Decision making could influence or affect users' decision making or the entity's accountability. If the information is deemed too minor or immaterial, it is not worth the cost or effort to include it. Okay, so every information should be included. Okay, every information. If the information will change the decision making of people who are going to use this financial statement, then that information should be present. That information should be present. So all material information should be present in your financial report. Okay, but these small minor petty expenses, if they are not included, it's not worth the cost. Okay, to put it in there, and so that's what materiality is talking about. That's what materiality is talking about. Materiality. I gave an example here. A small public library may spend $100 on office supplies. For its financial report, the amount is so small relative to the library's total budget that wouldn't significantly impact decision making or accountability if it's not reported. Thus, materiality constrains the inclusion of such minor details. And then so like $100, then no. But if you exclude $1 million from your financial statement, you have to look at that and put it in there. Okay, Danso.
So sorry.
Oh, okay.
I have a question. Sorry.
All right, sure. So that's that for the materiality constraint. All right, so let's move on to the cost benefit. Okay, cost benefit. Your cost. Okay, so whenever you are doing something as a finance person or as an accountant or as anyone, you have to always compare your cost and benefit. If whatever you are doing, the cost will be more than the benefit, please reconsider. Okay, so that's what this constraint talks about. The cost benefit constraint means that the cost of providing information should not exceed the benefit it provides to the users. If the expense of gathering and reporting certain data is high compared to the value of the information, it may not be included. Okay, so let's say we want to do a research on how sustainability, like how we are able to impact the society or anything. By looking at the cost involved, the benefits or the value to the people will not be so high, then boss, you know. Okay, so that's what the cost, because if looking at the cost you incur in doing those research, then I don't think there will be a need. That's what this particular constraint is talking about. Okay, so let's look at the example given here. So a local government might need to choose whether to report on the cost of every single office chair in its facilities. Gathering and reporting this information could be expensive, and the benefits such as improved decision making might be minimal. Therefore, the government may decide that the cost of reporting this level of detail outweigh the benefit, leading to a constraint on including such detailed information. Okay. All right. So let's look at the last one so that if you have any questions, you can bring them on board. Let's look at the balance between qualitative characteristics and the qualitative characteristics. Okay. So why is it a constraint? Sometimes you see that you want to provide more information. More information. So what this one is saying is that there should be a balance between the qualitative and if the thing is relevant, you are providing relevance more, you are providing faithful representations more, like there should be that balance. It's not like you are doing too much of information and the thing is relevant, but at the end of the day, people will not be understanding it, or like you are providing more information that people will not understand. Okay, so there should be that balance. So why is it a constraint? Financial report need to balance different qualitative characteristics such as the relevance, reliability, and understandability. sometimes enhancing one characteristics may compromise another. For example, providing highly detailed information that's relevant might make the report less understandable or harder to interpret. Okay, so that's the balance between the characteristics. Okay, so please let's all come together and mention the three constraints of the qualitative characteristics of the general purpose financial statement. Anyone can unmute and say something.
Materiality.
Cost benefit.
Cost
Cost
benefit.
benefit.
Cost
benefits,
benefits.
materiality,
Okay, materiality, and what else?
Balance
balance
between
between
qualitative
qualitative
characteristics.
characteristics.
Okay, so the three should be in your mind very, very well, please. It should be in your mind very, very well.
So, but why is materiality a constraint? I don't really get it.
Cost involved should not be more. If it's more, then you move away from it.
Hello, sir.
Okay, so that's that for the three constraints: the materiality, the cost benefits.
I think someone was
Can you emphasize on the materiality being a constraint?
You say what?
I'm
Victoria, please,
the
your line
materiality
is
is a
breaking. I can't
constraint.
hear you all, please.
So I
Sir,
think
sir, I
she's
think
asking
she
that.
wants you to
Okay.
highlight more on the materiality. Why is it a constraint?
Okay, so the materiality is a constraint because, okay, it's saying that if you have petty expenses to include in a financial statement, look at the cost involved. Because if this, and I gave an example, if $100 is not going to affect the decision making, because if you exclude $100 from your financial statement, it's not actually going to influence decision making of, because $100 is not going to change the profit so much. Okay, so if you have such situation, you can ignore, but you cannot ignore $1 million worth of inventory left out of what the financial statement or the financial report. So that's the constraint you are talking about. If the information is not that material, please don't put in that much effort to look for it to by force to put it in a financial statement because you think you left something out, which may be higher of cost, okay, compared to the value of information. You are comparing the value of information. Let's assume, as I mentioned, 1 million worth of inventory is left out of the financial statement. Okay, it's going to influence decision because like 1 million inventory dollars, because we are looking at how we are going to pay our suppliers, we are going to pay our creditors, and inventory 1 million is left out. We cannot do that. So we have to find a way and bring it back. Even if the cost is high, we have to find a way and bring it back. But let's say $100. Let's say, like an example I brought here, we have $1 million for the library. And at the end of the day, you excluded $100 from the financial report, and you think you have to spend more money to get this $100 in the financial report. No. That's why it's a constraint. So the constraint is saying that you shouldn't worry about small or minimal errors or material information in the financial report, but rather if a particular transaction is material enough to be included, then you have to bring in that particular transaction. I don't know if you understand this.
Okay, sir. Hello, sir.
Yeah, Konadu.
So in adding to what you just said, My
Okay.
place of work, we normally prepare monthly reports, financial reports.
Okay.
So when we are classifying our expenses, we take the first having huge amounts. Then the
Okay.
remaining ones, like 50 cities, 100 cities, we classify them as others. Because we know that their omission will not have any impact on the financial report. So I think
Exactly.
I get what you are saying. Yeah, thank you.
Yes. Yes. So let's read what we have here again. Okay. So materiality limits what information needs to be included in the general purpose financial report based on its significance. Information is only included if its omission or misstatement could affect user decision or the entity's accountability. Let's say you have excluded $1 million expense or 500,000 even expense. It's going to increase the profit and it's going to influence decision making. Okay, it's going to influence decision making because let's say your profit is overstated by $500,000. People will say, hey, you are doing well. Meanwhile, you excluded a particular transaction. But if the information is deemed too minor, it's not worth the cost and effort to include it. Okay. So that's the explanation to that. Okay, so please let's move on to the next. So we have done this. Okay, so we are going to look at the financial report itself. The financial report itself. The financial report itself. So please, we have done financial reports, financial reporting, and other stuff. I mean, financial reporting 1, financial reporting 2, financial reporting in our universities and everywhere. I want to know the key component of financial reports. Please, anyone can talk. The key components.
Revenue.
Asset. Liability.
Equity.
Please, you said what?
Statements of cash flow.
Yeah. Okay, statement of cash flow.
Statement of financial position.
Statement of profit and loss and other comprehensive income.
Okay. What else?
Statement of change in
Statement of
equity.
financial position.
Okay.
Then
So
notes to the
that's
accounts.
exactly. I feel presented. I hope you didn't look at what I've presented though.
No, sir.
All right, sure. I believe you. All right, so let's look at the core component of general purpose financial statement. What constitutes the component of what? A financial report. So first of all, we have the financial position. So what does the financial position do? Or what information does it give us? The information about the financial position of a government. Okay, so we are looking at the extent to which the management has discharged its responsibility for safekeeping and managing the resources of the entity. So the financial position is going to show you how resources were used. Okay, how resources were used, how they were managed, how much inventory do we have, how much receivables do we have, how much, those information are found in our financial position. Okay, so the accumulated fund, all those things is found in what? The financial position statement or statement of financial position. The extent to which resources are available to support future service delivery objectives and the amount and timing of future cash flow need necessary to service and repay existing claims to the entity's resource. Okay, so that's what financial or statement of financial position. It's just showing us how resources are being used. All right. How resources are being used. Okay, so please, any questions on the financial position? Okay, if you have no questions, move on to the financial performance statement. Financial performance statement. So in our normal accounting preparation or financial report, the financial position is our balance sheet, and the financial performance statement is about our profit or loss. Okay. Please, are you okay?
Yes, please.
Yes, yes, please.
Okay. So so what does this financial performance show? You see, the profit and loss, it shows what profit or loss, right? But in the public sector, we don't show profit or loss. We show what? Surplus or deficit. Okay. So it will show surplus or deficit. And in that case, we are going to look at the purpose of which resources were used during the reporting period. Okay, so we are going to look at the purpose. We said you paid for a particular expense. What was the purpose for that particular expense? Is it for administrative purposes, for all those things? So those are the purposes this financial performance is going to show us. Okay, so the next one is the cost, efficiency, and effectiveness of service delivery during the reporting period, and changes during the reporting period in the amount and composition of resources that are available for the provision of services for the future or in the future, and the claims to those resources. Okay, so these are the financial performance components of the financial statement. Also, we have the cash flow statement. The cash flow statement also shows how cash were received and where cash were received from, and how we spent our cash. So cash inflow and cash outflow. Okay. So that's information about the cash flows of a government or other public sector entities contribute to the assessment of financial performance and entities' liquidity and solvency. Okay, so that's all about the cash flow statement. Cash flow statement is going to show you how you got your cash and how you spent it, and at the end of the day, the balance will be your cash left in the entity. Okay, so that's that for the cash flow statement. I don't want to talk more about these things because that's what we have been doing. And the cash flow statement, as you already know, it goes by its name: flow, cash flow, how cash is coming and how cash is going out. Okay, number 4. And also the statement of changes in net asset or equity. Okay, so it shows how management has utilized and managed public resources over the reporting period, enhancing transparency and accountability. All right. So, and it explains movement in accumulated surplus, revaluation reserve, and those types. So you see in the changes in equity component, you will see how our changes in revaluation reserve, accumulated surpluses will be. That's where we are going to see them. Okay, that's where we are going to see them. So, but no problem. We are going to talk more on these ones. That's what you're actually going to do. That's what you are going to do using the IPSAS. So don't worry at all. We are going to talk more on them. But for now, you have to also read through and get to understand what is expected of you. And statement of comparison of budget and actual amount. So at the beginning of the year or at a period, you actually did the budget. Okay, so this statement is going to help you to compare what you budgeted for with what actually happened, the actual. Okay, so you compare and you know your performance. Okay, you know your performance. You have a budget of, let's say, 3 CDs was approved. At the end of the month, you spent maybe 2 CDs. Okay, so this statement will help you to analyze that. Okay, and also the note to the statement. Okay, so any information that is not presented in this statement will show in your notes. Okay, sometimes now they show non-financial information there, like the standard being used. Okay, the method of depreciation being used, sustainability issues are all being included in the note to the statement. Okay, the note of the statement. All right. So information about financial position, financial performance, and cash flow are typically presented in the financial to assist users to better understand, interpret, and place in context the information presented in the financial. General purpose financial report may also provide financial and non-financial information that enhances, complement, and supplement the financial statement. Okay. So the information is that are not in the financial position, financial performance, and the cash flow statement will be included in the notes for the users of the financial report. Okay. Please, are you with me? Any questions?
Yes.
Okay. So that's that for our components. So please, let's all mention the component of the financial report. Let's all mention, please.
Statement of financial position.
Notes to the financial statement.
Statement of cash
Okay. Who
flow.
else?
Statement of
Okay.
financial performance.
Okay.
Notes to the statements.
Statement of changes in
Okay.
net asset or equity.
Or net asset.
Right. All right. Thank you very much. Okay. Finally, let's talk about. Okay. I'm welcome. Thank you. Let's talk about the elements of the financial. Now we are done with the words, the component. Let's look at the element of the public sector financial statement. The element. Please, who can give me one element? Okay, revenue. Who else?
Assets.
Oh, element two. Asset. Okay.
Assets. Liabilities.
Okay, who else?
Expenses.
Liabilities. Okay, what else?
Expenses.
Okay. I think you're all right. Okay. All right. So let's look at what the notes say.
Hello.
Okay, so please let's continue. So the first element is what? Asset. As we all mentioned, asset.
You know, I think you can do this. How did you figure this out? How thanks to
Hello? Please, can you hear me?
Yes, sir.
Yes, please.
Okay. So the elements, the first one is asset. So asset is defined as a resource presently controlled by the entity as a result of what? Past event. Okay. So a resource is an item with service potential or ability to generate economic resource or economic benefit. Sorry. So that's what an asset talks about. So it's been what? Controlled by an entity. It's been controlled by an entity as a result of what? Past events. Control. The key word is what? Controlled. The controlled. Okay. And the resource is an item with service potential and the ability to generate economic benefits. Okay, so let's look at the control indicators. The control indicators. When you say someone has control over something, what are the indicators or what are the control indicators if you say someone has control over something? First of all, you have the legal ownership. The person must have legal ownership. Okay. Also, the person must have access to the resource. You cannot say you own something and you don't have access to it. How? Okay. So, and also the person must have the means to ensure that the resource is being used to achieve the objective of the entity. Okay. You say you own a car or a vehicle in an organization, and you don't have the means to ensure these resources are being used to achieve the objective of the entity. How? That means you don't owe it. Okay. So those are the control indicators. You must have the legal ownership. you must have access to that resource, and you must have the means to ensure that the resource is being used to achieve the objective of the entity. And also, you have to have the existence of enforceable right to service potential or ability to generate economic benefit arising from the resource, right? So these are what the control indicators. If you say control, if you have control over an asset, or if you say you have control over something, these are the indicators. Okay, so that's for assets. Please, any questions on assets? Okay, if there are no questions, you move on to liability. Liability is also a present obligation of an entity for an inflow of resources that results from a past event. So every day we have been talking about liability. Oh, I owe someone. That means you have a present obligation. Okay, right now I'm owing someone, let's say 1,000 cedis. If I'm owing someone 1,000 cedis, that means I have a present obligation. And it is definitely going to result in what? An outflow. This one, it's going to result in an outflow of my money in the future because I have an obligation. And in the future, I'll have a responsibility or an outflow of resource. My money will go out. Will go out as a result of past events because I took the money in the past. Yesterday, I took 1,000. So I have an obligation, a present obligation to pay. So that's liability. Okay. Okay, so that's liability. Please, you are supposed to meet all these, okay, to better understand it. But whenever you talk about liability, this is the meaning. Okay. All right. So let's look at also revenue. Revenue is defined as an increase in the net financial position of an entity, other than an increase arising from ownership contribution. So if an owner contributes something to the organization, it's not a revenue. But if you are able to increase your net financial position, that's whatever you are doing, you are able to like generate income from it. That means you are increasing your revenue, or that's revenue. Okay. Also, we have expenses. Expenses represent decrease in net assets during the reporting period, other than those relating to distribution to owners. Okay, so if you give an owner something, it's not an expense. But if you decrease your net asset or equity during the reporting period, you have incurred an expense. All right. Please, any questions? Hello, any questions?
No, sir.
All right. So owner's contribution. Owner's contribution is referred to the inflow of resources provided to the entity by its owners. Okay. So, these public entities are owned by what? Government. Okay, so in a case where government invests anything, resources into the company, that's the owner's contribution. That's the owner's contribution we are talking about. All right. So these are the elements of the general purpose financial statement. You have the asset, liability, revenue, owner's contribution, expense. Okay, so please, and the component are financial statements, financial performance, and financial position, financial performance, changes in equity, cash flow statement. Okay, so please, you have to know the difference between these two. When these things come, please know that you are getting 10 over 10. Okay, don't give small chance because okay, before you move to even the calculations, you know that you have your 10 marks somewhere. Okay, imagine these things coming and you don't have anything to say, that means please you'll be in a very hot pepper or hot fire. Yeah. So let's move on. In a financial statement, we have to also recognize these elements in them. You cannot say, oh, we have assets and you don't know how to recognize these assets in a financial statement. So we are going to look at the recognition criteria of the element of the financial statement. Okay, the recognition criteria of the element of financial statement. All right. So recognition is the process of including an item in a financial statement when it meets the definition of an element. And the recognition provides relevant information and faithful representation of the item. Okay, so we are going to recognize a particular element if it meets the definition. Okay, it meets the definition and also it provides relevant and faithful representation. All right, so let's look at the recognition criteria for an asset. So it's just the meaning of the asset. That's what I've actually separated them here. I've divided them into four. We said that the asset is what? It's where an entity has control, right? As a result of what? Past event. Okay, so here you recognize an asset if the entity controls the resource. If the entity controls the resource, you recognize as an asset if the resource exists as a result of what? Past event. You bought the asset in the past. Also, you recognize an asset if it has the potential to provide economic benefits or service potential. Okay, you have a vehicle. It's providing, or it has the potential to provide economic benefit to the organization. You recognize that. And if its recognition will provide relevant information and faithful representation, you also recognize it. So these are the four core recognition criteria for an asset. Please, are you okay? All right, so let's move on to the recognition criteria for what? A liability. A liability. You recognize a liability if there is what? A present obligation. If you owe someone now, I'm owing someone 1,000 cedis now, so I have what? A present obligation. The obligation arose from what? A past event. That means yesterday I took the 1,000, so the past event is what? Yesterday, and presently I'm what? I have an obligation to pay the person. The entity will also have to transfer an economic resource in the future. If I am paying for the thing, I have to transfer a resource. I have to transfer cash, 1,000 to the person. Okay, that's why I have a liability. And also, if its recognition provides relevant information and faithful representation. Please, do you understand? Okay.
Yes.
So let's move on to the revenue. Revenue is very simple. If it means the definition of revenue, recognize it. Recognition for an expense. If the item also meets the definition of an expense, you recognize it. Okay. Please, do we continue or you are tired? I can see people are not responding well.
Oh, let's
Hey.
Continue.
Please, your slide is not showing.
So let's continue.
Okay.
Please, let's continue.
Okay, that's fine. Okay, so we have the measurement of assets and liabilities and their presentation. Okay, so we have looked at what the recognition criteria of what the elements. Now we are going to look at how assets and liabilities are being measured and presented in the what financial statement. You have to first of all look at what the objective. Why do you have to measure these assets or liabilities and present them? Why? The objectives. Please pay attention to this part very well. Okay. The objective of measurement is to select measurement bases that most fairly reflect what the cost of service. The cost of service. Okay, so we are going to measure an asset. You have to look at the cost of service. So we are looking at the cost of service provided during the period and measured in either historical or current terms. Okay, so the cost of service, if you are going to measure an asset, you are going to look at what the cost of providing that service. Operational capacity. Does it have the capacity? Does the entity have the capacity to support the provision of the service? Okay, you are providing a service, you are providing an ambulance service. Do you have the capacity to provide? Do you have the resources? Do you have the resources to you are saying you are providing teaching listen, or you are providing, let's say, ambulance service. You don't have ambulance, you say you are providing ambulance service. How are you going to do it? Right. So you have to have the operational capacity. You have to also have the financial capacity. Okay. So we are measuring because you want to know the cost of the service, the operational capacity of the entity, and also the financial capacity of the entity. Do they have the financial capacity? Do they have the financial capacity? Okay. So please, can anyone mention the major measurement basis for asset liabilities? George, do you want to say one?
Cost of services.
No, that's
The
the
historical.
objective. Okay, Bassett.
Historical costs.
Okay, so historical. Can you say something more about historical?
So the cost you incur to acquire the assets or create the assets.
Exactly. Please, who else? Fast, so that we can. In the next 30 minutes, we have to finish.
Market value. Current cost.
Market value. Please, who mentioned market value? Say something small about it, please. Small.
The amount for which one asset would be exchanged.
Exactly. Exchange. That's the key word. Exchange. Exchange between what? Parties. 2 willing parties. Okay, who else? Oh, please come on board. Let's finish fast. All right, it's okay. Let's move on. Please, I hope you are not sleeping.
No,
okay, so we have the historical cost, market value, replacement cost, net selling price, and value in use. So historical cost has, as Bassett mentioned, is the amount paid to acquire, construct, or develop an asset at the time of acquisition, including any related transaction cost. Okay, so after you recognize this, its cost is gradually allocated over its useful life. It's like depreciation, okay? Or you amortize the asset to reflect the consumption of the service potential. Okay, so a government department bought a vehicle for 400,000. It is a historical cost, it was 400,000, subject to subsequent accounting such as what? Depreciation. Okay, so that's the historical cost. So we are going to look at how this historical cost can be linked to what? These three, the objectives, the cost of service, the operational capacity, and the financial capacity. I will be doing for only the historical cost, and the remaining ones, please, you read on them. Okay. Thank you very much. So how the historical cost links to what? The financial reporting objectives. Okay, so first of all, we have to talk about the cost of service. Cost of service. Historical costs show the actual resources used to acquire the assets to consume. Since the costs are based on the past transactions, they reflect what was actually spent on providing the services during the. And let's look at what the cost of service says. It says that it measures the cost of service providing during the period measured in either historical or what current terms. So the cost that was incurred to buy this particular asset or to buy a particular item will be the cost of service. Will be the cost of service. Okay, so we have the operational capacity. Historical cost helps users to understand the resources available for future service delivery. Assets are recorded at their acquisition cost, showing the service potential that remains available to support operation. So you have bought an asset, okay? You have the, as soon as you buy the assets, that means you have the operational capacity. You say you want to do, ambulance services. You have bought the asset at 400,000 Ghana cedis. As soon as you buy it, that means you have the operational capacity to operate whatever you want to do. That's the ambulance services. You have the operational capacity. Okay. The financial capacity. So this one shows the value of asset controlled by the entity. These assets may be used as a security of borrowing. So you have helping users to assess the entity ability to fund its activities. So you have been able to acquire this ambulance for your ambulance services. Even if you are going in for any borrowings, you know that you can use this as a collateral, right? To get a borrowing from an institution. Okay. And also, you having the ambulance will also let people know that, oh, you have the ability to fund your activities, right? So these are what we are talking about. You are linking these three objectives to the measurement. The measurement. Okay. Thank you very much. So please try your best and do for the other measurements. Okay. Even though we are going to talk about them, but I will not be linking, and you have to do it because it has come in. It's in the past question. That's why I'm stressing on it. Okay. So a typical example is the Ghana Education Service procures a fully equipped school bus to transport students in a rural district at a cost of 600,000. The school bus is expected to be used for 10 years and will be depreciated over its useful life. After 3 years of use, its carrying amount has reduced due to depreciation, but is still in active service. So what's the cost of service here? Yes, please, what's the cost of service?
600.
That's it.
600,000.
Yes, 600,000. Okay. So what will you say about the operational capacity? Anyone?
So it has reduced.
No. That's not the explanation, Victoria. That's not the explanation. Operational capacity.
Yes.
Exactly. Because you are saying that you want to what? Help transport students in the rural districts. Now you are looking at the operational capacity. Do you have the capacity to do that? Yes, because you have bought the school bus. Since you have bought the school bus, you have the capacity to do it. But you say you want to help students transport themselves, like transport students to their house, and you don't have a school bus. How are you going to ensure this is done? Okay, so that's that. And do you have and please, what will you say about the financial capacity? I didn't even bring the financial capacity here. But what do you say about financial capacity?
Since it's an asset, you can use it as collateral.
Yes, and even people will know that, okay, so you have the financial capacity because you have been able to acquire a bus to transport the students. Okay, so you have the financial capacity. Please try and read more on this, the cost of service, how you are going to link these things to the objective of measurement.
Sir, please, a question.
Okay.
It's related, but just a bit backwards. The replacement cost in terms of the liability aspect. I don't know if you can explain it to me.
What, please?
Replacement cost.
Replacement cost.
Yes, in terms of liability.
Have you spoken about replacement cost yet, please?
No, I saw it's the measurement of cost is the same.
Oh, so okay. So replacement cost is actually, so for liability we don't measure it using the replacement cost. Okay. But for assets, if you have an asset, okay, you have an asset, you want to check if its replacement will be more efficient than its use. Okay, so you have a laptop, you have used the laptop for, let's say, 5 years. Okay, you have used the laptop for 5 years, and you are deciding whether to buy a new one. You are looking at the cost of buying a new one and the cost of using the old one. Okay, so that's the replacement cost for asset. Okay.
Okay.
I think people are tired already. Now let's look at the market value. The market value is the price at which an asset could be exchanged between informed, willing parties in an open market, open or no active market. It reflects the current amount an asset could fetch if it was to be sold at the reporting date under normal market conditions. Okay. So you acquired, an example is you acquired a land, or a government acquired a land years ago for 200,000. The land currently can be sold at 1.5 million. So the current value will go to 1.5 million. Okay. So that's what the market value talks about. Now let's look at the replacement cost. The replacement cost is the cost that the entity will incur to acquire an equivalent asset at a measurement date. Okay, so you have as I was saying, you have an asset and you want to replace it. Okay, so you are going to look at how that will be measured. Okay. All right. You're going to measure it and what to see if you acquire a new one or you will not. So that's the replacement cost. A government hospital bought an X-ray machine 5 years ago for 600,000. Today, an equivalent machine cost 1 million. So the replacement cost will be 1 million. All right. We are going to use this a lot in the preparation of financial statement, in the valuation of assets. Okay, like inventories. So net selling price, net selling price, net selling price, net selling price, net selling price. So the selling price is, you know, selling price, right? You are deducting just the cost of sale, like the cost of sale from what your selling like price to get the net selling price. Okay, you wanted to sell an asset in a company. So the price of that asset will be the selling price minus the cost incurred in what? Selling it. Okay. So let's say you want to sell your laptop and someone said he's at you are in Accra, someone said he's at Ho. So send it, but you take the cost involved, like to transport. Okay. So if you less that cost involved in transporting it, that means the net selling price is what? The difference. Okay. So the net selling price is the amount an entity can receive from selling an asset after deducting selling cost. It represents the net amount expected from the disposal of an asset at the reporting date. Okay, so that's the meaning. So a government office has an old printer, it no longer uses, it can be sold for 1,000. It costs 100 to repair and sell it. Net selling price will be what? 900. Okay. So maybe we can end here, and in our next meeting, we look at the sub-unit 2, the role of the National Public Sector Accounting Standard Board. So the board and their purpose. Okay. So please, on the first part, you read. Yeah. So on the first part, I mean the unit 1, you read through very well. If you go down, like the latter part of the slides, you see some nice past questions here. Okay, these are all from the past question. Okay, so yeah, you see that discuss the objective of measurement of asset, the cost of service, and the rest. Okay, so operational capacity and the financial capacity. They ask us to discuss. and suggest an appropriate measurement for these ones. Human resource software developed internally by the entity. So all these things, November 2021, question 1B, general purpose financial, and they are asking us to explain the information needs, primary users, information needs of the users of primary, the primary users of what general purpose financial report, and discuss the statement. This does not mean that every public sector entity is a reporting entity. So you have to explain that. We learned about reporting entity today, and you have to be able to explain this one. And historical cost, market value, and replacement cost. You have to explain for 9 marks, 9 good marks. If you get this one wrong, that means okay. And also May 2020, question 5C. Explain the qualitative characteristics of the general purpose for each observation. So they gave you some observations here to do. So yes, so if you come here, I have some questions for you. You can go through them. Okay. Yeah, past questions. You can go through them. And my advice is that whenever you read, try and solve questions. Whenever you read, try and solve questions so that you know there's questions they can be certain from what you are reading. Don't just be reading. You read a conceptual framework, you find questions. Even if you don't want my question, you can go to the ICAG website, question 5A, question 5. If you look at question 5, you see plenty questions of these ones there. You can read on the solution, what ICAG, the standard solutions, and you'll be fine. Okay. So thank you all for coming today.